Hello and welcome back. My name is Josh, and today I want to talk about Alphabet. Many of you might know it as Google, but Alphabet's the name of the holding company. They own Google as well as a number of other properties. And I just want to go over the company a bit and discuss my thoughts. So I'll use my three-pronged framework. So one, the product and service. Personally, I mean, we all know Google is the search page for 99% of people, probably not 99, 90% volume in search term. It's the homepage of most people. When I just type something in, it automatically searches Google. There's also a number of other products, one of which is YouTube, obviously where I'm posting this. I personally am a huge fan of YouTube, and I've been a shareholder in Alphabet, disclosure. But the reason that I was such a big believer in Alphabet and Google as a company was because of YouTube, and I saw the value there. Stock's done phenomenally well in the last 5 years, um, especially during the last year. It's really shot up 67%. Um, and actually, if we go and see a breakdown, this is right from their Q3 earnings. I took those numbers, but if you look right here at those numbers, you can see each of the different segments. So they have search, which accounts for still the vast majority of their revenue. We actually look at it as a percentage. It is, oops, there we go. It was 57%. Still about that. So represents about 58% of their revenue. And amazingly, even though this is a huge portion, massive business, $38 billion in a quarter, um, they still grew at 44% year over year. That's amazing. The thing I find, so then they have network, like ad networks, I think that's where they put their phones and other physical devices, cloud, which is obviously a huge part and a growing part of the story. Obviously, Amazon is AWS, Microsoft has their cloud, Google's also betting on their cloud. But the one again that I was most interested on was YouTube, which still makes up a relatively small part, but it's a very fast growing part. It now makes up about 10 or 11% of revenue, but you can see it grew 43% year over year, which is amazing. Unfortunately, not unfortunately, but the whole business grew at 40% year over year. So, it's not, if it continues to grow at this rate, I think it will become a bigger portion of Google, but the whole company is growing so quickly, it's crazy. Um, and again, this is just for Q3. So if we actually do that as a revenue run rate, so we times that by four, say what would you make in a year? It'd be about 32 billion in revenue just from YouTube. Oh, sorry, never mind. Sorry, 28 billion. So that's this number times four. And then you might say, how much does Netflix make per year? Well, Netflix makes 28 billion per year in the last 12 months. So again, YouTube alone um, is basically bringing in the same revenue as Netflix, which is staggering and unbelievable. And YouTube is the second largest search engine in the world behind obviously Google. And the thing that I find amazing about YouTube, Netflix, there is operating leverage. So they spend money to produce content. They're spending billions, and it was a genius move by them. And as it scales up, you can spread that cost of billions of dollars of content over more and more people. So you get this operating leverage where you can see here with their margins. I think I had discussed this previously. You can see as they're scaling up, their margins are going up pretty nicely. Their gross margins and especially their operating margins. So good for Netflix. Again, I'm a big believer. What I love about YouTube in particular is they don't spend any money to produce the content. They just do a rev share deal with the YouTubers. So they need no upfront cost. I think they have one of the best algorithms. I mean, I will admit I'm probably addicted to YouTube. I'm obsessed, and the algorithm really does. Again, obviously, there's some negative news where it can send people down negative rabbit holes of, conspiracy theories and stuff. But I still think on the whole, it's a extremely good media service, and I think it's going to be one of the most important media companies in the world. I think it'll probably be Netflix YouTube, and Disney will be the three winners of this. And again, there will be premium. So again, that is Netflix. I'm still a believer in this, but I really like this model where they say, hey, you know what? We like they want to create. They are creating small businesses. If you have a webcam and an idea, you can become a YouTuber. So I very much think that it's creating small businesses. People are growing, making a living out of this. So I think it's good for the economy, but I also think it's a great business, and I think it's only going to continue to grow, um, even though it's still only 10% of the company. So what I think of the company as a whole, obviously I'm a believer in the cloud. The cloud's growing, search is growing. I don't think Google's going anywhere, but there's a very rich valuation. I bought around here where it kind of plateaued in 2018, around 1,000. I think I bought a little more, maybe around here, 1,400. Obviously, it's gone up. So is it still worth it? Well, like I said, they grew 44% year over year. Um, and they're worth almost $2 trillion, which is again crazy, 1.97 trillion. So we plug in their revenue, their market cap. I'm using an exit multiple of 22, which is a little conservative, but let's be a little conservative. Their margins have historically been, um, let's see, about 25-ish, even though I'm actually surprised it hasn't been higher, and I think they could even be higher. I think it could be between 25 and 30, but again, let's say conservative, go with 25. So at 25, they just have to grow at about 12% per year over the next 12 years. Now, obviously, you could say that's a lot, That would be revenues of $775 billion dollars uh, in that time. Is that realistic? Personally, I actually think it is. I really think that Google's not going anywhere. There is obviously legal troubles they could get into where people are trying to break up big tech. I don't necessarily think that would hurt them. It would definitely hurt in the short term, but I think there's lots of times where splitting companies up can actually be better for both companies. I mean, eBay had PayPal. They split out eBay. They split PayPal up, and look at PayPal from when it got broken out. I think this is when they broke it out. It's up a ton because they could really focus. I'm actually a big believer in sometimes doing that. Again, not saying with Google that it would be valuable, but I don't think it would take away value. I think YouTube as a standalone company would be worth a ton. And sometimes when you have this conglomerate, you almost get a discount because people say, and they're not focused, they're all over the place. So, there is risk in the short term of the legislature and risk of breaking up, but I don't think that's the case. That's actually going to hurt them in the long run. I think this company is only going to continue to grow. I think marketing's only going to continue to get more online, more digital. I also think Google's got more data than anyone else, and I'm shocked that they haven't used this data in more and more ways. Why aren't they getting in the insurance industry? They know more about you than basically anyone other than Facebook. And there's so many industries where data is the difference between making good decisions and bad decisions. Again, what is insurance? I think I spoke about this during a Lemonade one, but it's the ability to price risk. If they can tell you're searching for bungee jumping lessons, maybe they know you're a little riskier and they can price it differently. Even if they're not in insurance, I'm shocked they're not selling some kind of data. Again, people might think um, what's happened to this country or whatever. I hear this stuff all the time about data privacy. Like, we do live in a world where we are trading some semblance of privacy for free stuff. And everyone has the right to choose whether that's the right decision for them. I don't like it when they hide that. But to me, if you consciously say, you know what, I'm willing to have an amazing media company in YouTube, get all the answers I want through Google, and get cheaper phones with Android, who's basically subsidizing it and then using the data they collect from your phone to sell you more ads. If you say, I want to do that and I'm willing to give up that data for cheaper things, I think that's what, if you are aware of the risks, more power to you. To me, it's like the concussion debate regarding American football. I do feel very much for football players in the 60s, 70s, 80s when, yeah, we knew that Getting hit in the head probably wasn't good, but no one knew the actual degree to which concussions would affect people. So I really do think that those people were done a disservice. And same with people who were early on the internet and didn't realize that that their data was harvested. Today, everyone should know, at least especially in the developed world. Here where I am, we talk about it all the time in Canada, the US, selling privacy is Facebook, snooping on you and reselling your data, and it's well understood and known. So today, just like a football player, today, if you choose to go in the NFL, that's a valid choice. If you say I'm risking concussions in order to be a to make millions of dollars and play a sport, that's a decision you should have the right to make. So I think it's the same with privacy. You now know that they're taking your data. Do you want to do that, or do you want to spend more money on privacy? And that's really how Apple is trying to position themselves. They're trying to position themselves as the company that cares about your privacy. I think it's great marketing. I think it's a great shift. They've also grown a ton. Um, and I think that there is a growing cohort of people that do care about that. But I still think, and this is a separate theory I have, I think there's the shrinking middle class of everything. I think there's going to be, top 20% of people who really care about data and say, I don't want to see ads. I will pay a premium to not have my data checked and not be served ads, and have subscription services and all that. And then the bottom 80%, maybe it's 30-70, but I typically go 80-20. Bottom 80% say, you know what, I like my cheaper things. I don't want to pay for it, so I'm willing to get it for free and give up a little data in return. And I think that that is a valid choice that one has to make. So again, I think that we are going to see Apple's going to take up a greater and greater share of that top 20% of people, and more people are going to go, the world's dividing. Scott Galloway, I think, says, he calls it Android versus iOS. iOS is, the premium side, you're paying a premium, but you're getting privacy and data restrictions in return. And the other side is there's hidden externalities, but you're getting it for free. You could even make the comp to Robinhood, where, Robinhood sells your order flow. I think that's a valid choice. I do think on the whole, it's actually cheaper, but some people just don't like the way it sits. And so I understand that. So I'm actually okay with the whole, I have no qualms from a ethical standpoint with them, tracking my data, because I'm aware of what I'm giving up, and I think that it's worth what I'm getting in return is worth it. Um, However, obviously, who knows where the future holds? Let's get back to the actual stock. I still think it's a strong investment. I think digital is only going to become a bigger part. I think cloud, there's tons of growth there. It's going to be a competitive market between them, Amazon, and Microsoft, but I think they're going to be a big player in cloud. I think they're going to be a huge media player with YouTube, and they're trying to get into video games too, which I think is a growing market. Obviously, YouTube's a huge place for streamers, but I think they're also trying to do, they had a video game streaming service. I'm trying to remember what it's called. What's it called? Let's look it up. Google video game streaming. Stadia. It's not there yet, but I do think that this is going to also be the future where, just like, we used to have to have a DVD player, now everyone streams movies. I think we're going to see streaming of video games. We're going to get that latency down where you can actually play a game and not have the disc or have even a console. It's going to be the actual game. The game will run on a cloud server and you will just connect to it through your internet, and so you can play it right from there. I think that's going to be a much bigger part of the future. So I think Google's, again, just going to continue to grow. And one last thing I'll notice, you can see here this thing called bets. These are what they call their other bets, and these are like pie in the sky ideas, that are unlikely to work out. But if they do have the chance of having 10x, 10x, 100x revenue. So I think this was where they had Waymo, which is their self-driving car. They were working on that for a while. They might have even spun it out, but I just think Google has so much money, so much cash, so much development talent, and such a strong lead in these that I think it's unlikely that they're ever going to get unseated. I think that they're only going to continue to grow and become more integral to our lives. Obviously, I think the pandemic showed that there's still so much growth left in digital that we pulled forward e-commerce. I think, we are only really in what they call Web 2.0, and a lot of people say we're going to Web 3.0. Yes, right now we can search things and Google them, but I think we're going to live more and more of our lives are going to be digital, and more of not just our experiences are going to be online, but e-commerce, how we buy things is going to go up, how we communicate with each other is going to go up. So I still see a long runway for Google, and that's really what you have to believe with this company. Again, if you believe that their growth is going to slow significantly, it's a bad investment. I though see a lot of runway in this portion in the 10 to 20% annual growth. And if you look, they've actually had growth rates in the probably 20% range over the last, probably averaging about 20% over the last 10, 20 years. So I still see lots of runway. I think they could have, I think inflation could also help them because you could see them raise ad rates. But yeah, these are my thoughts on Google. Let me know what you think of Google or Alphabet. Are you a buyer, seller, holder? Do you think YouTube is going to be, if it ever got spun out, do you think it's worth more than Netflix? Let me know your thoughts in the comment section below. Again, my name's Josh. Thanks so much for watching, and talk to you next time.